270,000 Bitcoin in 7 days. Guys, in this video, we're going to be diving down into the world of Bitcoin. We're going to be taking a look at a lot of data, specifically around what is going on with movements of BTC. As we get into this video, if you find it useful and informative, hit that like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe, tap the bell, select all notifications, and in doing so, you are going to be kept up to date with all of the videos that we do here at Cheeky Crypto. Right, with all of that said, done, and out of the way, let's jump on down into the desktop and take a look at what is going on here with Bitcoin. Okay guys, I really want to start off with this particular report. I think it's a really good one to kind of understand what's been going on, what's potentially on the horizon next. And I do want to kind of highlight a couple of really interesting kind of, pieces of information here. So this has actually cropped up across a couple of other influencers and Twitter, etc. And I really want to kind of just give my kind of point of view on it, because sometimes it can be a little bit difficult to necessarily understand exactly what's going on here. And I want to kind of cut this down into really simple terms, so that we know exactly what's going on. We don't have to kind of get confused with various different numbers being bounced around or whatever, or just speculate on declines and stuff. And what I want to do is give you basically a no BS approach to it. So what we have here effectively is the number of addresses with a balance of more than 1,000 Bitcoin. Right, sounds like a pretty significant amount of Bitcoin. Classes yourself as a whale, however you kind of want to articulate that. And we've seen some interesting declines in people who have been holding 1,000 BTC, right? You can see that here. And obviously in 2017, right? This is the kind of thing that people are referring to with this particular report, and they're kind of glancing over a few really really important things, and I think it's really important that we understand this. Okay, so what we're actually looking at here is a decrease in the number of wallets that have over 1,000. Now what we don't know is if they sold their entire bag, or whether or not they've actually just sold a couple of Bitcoin that takes them down to 950 Bitcoin. I don't know, but what we do know is that actually it's not as significant as the chart is suggesting. Okay, and this is really important because it looks really bad on the chart here, but this is actually only a 14% drop. Okay, from the top to the bottom here, this is a 14% drop in whales that have over 1,000 Bitcoin, right? And when you look at the chart, it actually looks and makes you feel like there's a huge decrease in the number of whales out there. They're dumping their bags. It's a 14% drop in whales. We hold over 1,000 Bitcoin, right? So it's not overly that bad. And when actually we refer back to the 2017 peak here, you can see this was also happening, but it was actually happening back in 2014, this decrease. And I'm not going to really focus in on that. I'm just going to take this high point here from 2017, effectively 1,800 whales with over 1,000 Bitcoin in their wallet, and then obviously it comes down to 1,600. That was an 11% drop. Okay, so again, it's not the end of the world. Now I know a lot of people can say on it starts of a crypto winter, right? They're dumping their bags and pumping up, etc. Now this one's really explainable because obviously they were following a Wyckoff accumulation, right? And the number of wallets here, you have a high here of 2,400, dropping down to a low point of 2,100. So effectively 300 whales who decreased their bags during this Wyckoff accumulation. Now, that could be numerous different reasons. It could be, several whales who kind of divvy that out across multiple different addresses for security reasons. It could be institutional traders with multiple wallets trading as well. I don't think it's a huge number of players, and it actually only equates to 14% of the entire number of wallets that actually hold more than 1,000 Bitcoin, right? So it's a 14% pullback in terms of wallets holding more than 1,000. So I really wanted to kind of do this video to kind of just say, 14% makes it look a lot worse than it actually is. It was 11% in 2017. And again, these are things that you would expect to happen, and there's going to be fluctuations with that. Now, the other thing that I really want to kind of point out to you guys is 270,000 Bitcoin in 7 days. What do I mean by this? Well, that's this chart right here. Unlike what's been going on previously, and I'll get into that in a moment, we've actually seen 270 Bitcoin leave exchanges in 7 days. In 7 days, 270,000 Bitcoin has left the exchange, right? That might sound like a lot to you guys, right? But actually, in contrast, 270,000 Bitcoin in 7 days is actually quite a small amount in the grand scheme of things. That being said, though, it's not what you would expect to see, if you're seeing a bear market. You would actually see the opposite, and I'll get into that right now, in fact. So obviously this is the May pullback. You can see here on these big days here, we were seeing 150,000 Bitcoin in one single day, right? You saw that come into exchanges in a single day. So 270 Bitcoin or 270,000 Bitcoin, it isn't a lot in the grand scheme of things, but what it is indicating is not what you'd expect to see. It is actually more accumulation occurring rather than bear market, right? So in terms of crypto winters or bear market kind of talk, this is the kind of thing you would see. But we can, of course, dive right back into that 2017 peak. And what do we actually see here? Well, we see, 212,000. We see up here at the peak here, 232,000 Bitcoin coming in on any single day consistently. And what you actually have over a period of time here is several million Bitcoin going onto exchanges. You don't see it leaving exchanges, not in the kind of amounts that we've seen recently. So what we're actually witnessing right now is accumulation, not bear market. We are not seeing millions of Bitcoin go onto exchanges. There's been a decrease in those wallets, and they could have been decreased for many different reasons. We don't necessarily know why. It could be that actually they're just managing their risk, spreading, what was 1,000 Bitcoin in one wallet across two wallets for security reasons. It could be that they're dumping on the market as well. But what you're actually witnessing here isn't a huge influx of Bitcoin to exchanges. What you're actually witnessing is a significant pullback. You're seeing an accumulation. You're seeing Bitcoin leave the exchanges overall. Okay, so vastly different to what you would expect to see during a crypto winter. And obviously, when we take a look at the data and we start thinking, the number of whales decreasing by 14% or 11%, and then there was a huge accumulation over 2019 into 2020, etc. So where we are right now, this actually isn't a bad position to be in. There's a lot of whales holding more than 1,000 Bitcoin, right? Significantly more than there was previously. So when we start thinking about 2017, we think about the crypto winter that kind of followed it, and it is crypto winter when it lasts for a significant portion of time, specifically over a year, 1 to 1.5 years or so. Those you can articulate how you want. Bear market, crypto winter, an extended bear market, extended bull runs which follow, whatever, right? Ultimately, it's the same thing. It's a prolonged period of time where the trend is sideways and down. Okay, that's kind of it. Now, in reality, what you actually have for Bitcoin here is it wasn't really a huge prolonged bear market per se, and because what actually happened effectively was the bull market started in 2019, but the pandemic pulled it back down after a bit of a break to the upside. You can very clearly see this break right here, this pull up and then pull back down in 2020. Okay, so effectively there was actually a relatively short bear market, and again pretty much aligned to what you would kind of think, and then getting pulled back down, and then we got that kick start. Now, obviously, if you're following the channel, where I position on this. I don't think we're bear market. I don't think we're in a crypto winter. I think we've actually got a nice healthy correction, and I think the next step to the upside is due pretty soon. And on that note, guys, let's actually jump into the charts and actually take a look at what is going on with Bitcoin. Okay, so here we obviously have our hourly chart, and I've been predicting the $35,000 Bitcoin. Yesterday, we were looking to see if we could break this area up here of 38,900. That hasn't happened, but instead what we've seen now is this down trend. Okay, so we are looking to kind of come in and complete this $35,000 Bitcoin, right? Obviously, the stochastic RSI is obviously quite up there, quite high. So the pullback is coming. It's there. We are anticipating that move down. Okay, we are looking to go down lower than we were previously. That was 35,000. So let me just show you that. Just down here, we had this double bottom, effectively, just right here. Mark that up. Okay, so we are looking to go down a little bit lower than that. It's actually not too far because it's a relatively flat correction, a bit of a zigzag, if you will, as in we've almost pierced or came up to the light-to-light position here at the start position. So ultimately, we are relatively fat. It comes in at about 35,320 approximately. It can overextend a little bit. We can come down a little bit. We can go up a little bit. But it's going to be in and around that area, I do feel. One thing that we want to avoid is the 34,100 level. That would be an impulsive trigger, but I think that's very, very unlikely considering the sideways nature of this particular pattern so far. It is very much a zigzag, and it is very much, just trading sideways with a simple ABC. But there are going to be waves within waves, and we want to be monitoring that. So if we do actually see a $34,000 Bitcoin, then that's going to potentially take us down into those lower areas, which I've also been talking about recently as well. So obviously it sounds like I'm bearish, right? But I'm not. I'm actually thinking that there's a requirement here to come down in towards our $31,000 range. I've been talking about this for a while. This is where we actually start to see a couple of different timelines coming into the same kind of ballpark figure around $31,000. So if we do actually see this impulsive break to the downside here on our hourly, we might also see a fifth wave potentially coming in right down here in this low point at $31,000. That basically then would complete everything ready for that next step, that next big move to the upside overall. So we are getting very, very close. I feel that we're getting there. And once we actually complete this bottom, I think that's where most of the accumulation is going to occur. And then we're going to really significantly push up to the upside. So on that note, what we'll do is we'll jump up into our our daily chart, and just show you guys, what's going on here with this daily chart. So here's our flat correction, okay, kind of going sideways here. Effectively, it's a big ABC move. Now, this one I'm going to remove because I think that's in play anymore. But effectively, we have our A wave down. Okay, this actually starts from that 65K down to 28K. We have the B wave up, just overextending in the zigzag pattern here, both at 67 and of course the $69,000. And then we pull back down, completing that C wave, that zigzag pattern, at about approximately $31,000. It's possible that we can go down lower than the $28,000 range, but I think that's it's not likely. I don't think it's probable. I think the most probable area right now is $31,000, and for that reason, that's a lot where kind of a lot of accumulation is going to probably occur, in my opinion. That seems to be the most logical area to kind of really be focusing in on. If of course we do lose 28K and then potentially pushing down a little bit lower, but I do think that's very unlikely at this point in time. So overall, the chart's looking very, very good, very healthy, and we are just kind of waiting for this completion. There's a lot of noise going on here. We are of course overbought on our daily chart, so we are looking for that next step down, and once this kind of comes down into that range of $31,000, hopefully this stochastic RSI will be in this oversold area that allow us to then continue to the upside. And of course, when we actually take this up into our weekly chart, what do we get? Well, it looks like this zigzag pattern is actually inside our fourth wave here, effectively meaning that we are likely to complete that fifth wave up afterwards. And what we're looking for in theory here is actually an impulsive break. Once we have that 31K, I would expect a wave 1, wave 2, wave 3, wave 4, and a wave 5 completion. Whether that is something like this, I don't know, but we'll have some kind of impulsive break, and whether or not this actually goes up to, it should at least go to, I should say, the most minimum area would be the $114,000 range, and of course we could talk about $250,000, etc., depending on what's going on there. And the other thing I really want to kind of point out, guys, and I know a lot of people kind of get this a little bit confused, market cap is just price. It isn't the amount of money that goes into a project, so it isn't a barrier to price discovery. All that you are actually witnessing there is the current price multiplied by the circulating supply. Two things really matter for price discovery: supply, as in you need to shock the supply. So if the supply suddenly decreases, and then there's a huge demand for something, obviously that pushes the price up. You see this every day in your grocery shopping, etc. And of course, the second thing that's really important is that demand, right? So get the demand in, shock the supply, and you're going to see a significant bump in the price of a product, or in this case, BTC. So market cap doesn't represent the amount of money in the project. It does not represent the amount of liquidity in the project. It simply is the price multiplied by the circulating supply. It cannot be used, and I cannot stress that enough, it cannot be used as a barrier for price discovery. You cannot use it as a price discovery tool. It kind of ranks things, based on this kind of idea that, because the price is a certain amount of money and obviously the circulating supply is X, those two things equal value, but it doesn't actually mean anything in terms of value. That comes completely separately. All you're really looking at is, of course, the price action. So with that being said, and we can see Bitcoin's price chart looking pretty good, moving up to at least the $114,000 seems the most logical here, with an impulsive break. That's kind of what we're looking for. You know, that 1.618 is the minimum kind of threshold that we're looking for, potentially pushing up higher, but obviously we won't talk about that just yet. Of course, the weekly stochastic RSI doesn't really need much explaining there. It's heavily oversold. So obviously, as it's oversold like this, we do expect a significant push to the upside. We are very, very close to the bottom, in my opinion. $31,000 is just around the corner, and once that kind of comes in, I do see that impulsive break to the upside, where we start to see some significant price discovery here for Bitcoin. But it won't be a straight line. As you can see in here, we also have, you know, 2 pullbacks of significance within those 5 impulsive moves to the upside. It's not a straight line. It's going to be slow and steady. This weekly chart basically could play out for quite some time, you know, so it's going to be one of those things that you cannot predict time, not accurately. That's going to be the most difficult thing to do. And you kind of read these charts, read the patterns, read the data, understand what's going on in the background, and try to make some good assumptions over what is going on. Obviously, there's the macro events as well, what's going on in the real world, the Fed, etc. All do play a part, but again, a lot of that stuff is actually utilized by institutional investors and whales, etc., to, you know, instill fear or to help move the needle in the direction that they actually want it to. So you'll find that mainstream media will be picking up on certain things at the right time, trying to get you to kind of FOMO into things like that. And you'll see articles kind of spreading all sorts of different kind of fear when they also want the price to go down, whether that's a death cross when the price down, or a golden cross when the price has to move up, etc. A lot of kind of noise in the space overall. But guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe, tap the bell, select all notifications, and in doing so, you are going to be kept up to date with absolutely everything that we do here at Cheeky Crypto. With that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.